One of the things that I saw that really kind of shocked me, however, when this news came out on Thursday, gold was at about $3,400. And I've never seen in my career where the futures price exploded to $3,500. You had $100 gap between gold spot and gold futures. And what I take away from this is that even though the tariffs on gold are off the table, this shows to me how sensitive the global plumbing is and can be for gold, and how quickly political risk can distort prices and trade flows like that. Now it's backed off, but just how fragile it is. And in relation to the massive amount of gold that's coming into the United States, I can't even explain to you really how much gold is coming in. It's so far off the table. I'll try my best just to give you the first 3 days example for the month of August. Now, since November, Paul, we've been a net importer of gold. And my whole career, 35 years, there might be a month here, a month there where we're importing gold, but in general, we are net exporters of gold. Yeah. But the amount of gold that's been coming in is off the charts. I mean, you're talking $100+ billion. And I would argue a lot of gold is coming in through unofficial channels, not through the Comex, being delivered into vaults on behalf of proxy banks like JP and Citi and Goldman. With all of that being said, I used to say as a standard statement that less than 1% of Comex contracts ever stood for delivery, which is a truism. They never did. And most Comex contracts were used to hedge exposure, where if I have 5,000 ounces of gold in my warehouse, I'll sell 5,000 on Comex. So if the price of those 5,000 ounces drops by $100, I'm not down $500,000 because what I sold on Comex went up. It's a way for myself or producers, gold mines, etc., to offset exposure and risk. It's also a casino of sorts for people to speculate and gamble, but very little ever stood for delivery. So let's use the first 3 days or 4 days of the August contract to give you an idea of just what I'm talking about. On top of the copious amounts of metal coming into the country, which the mainstream media is completely missing and ignoring, I'm talking billions and billions and billions and billions every single month. In the first 3 days, we saw 20,160 contracts post, meaning they're posting, right? They're gonna settle. Of those 20,160 contracts, 100% of them, not 1% like it always used to be, 100% stood for delivery. You're talking $7 billion worth of gold stood for delivery, and 100% of those contracts that posted stood for delivery. This is a trend we are continuing to see. And so this would have really disrupted things, where all of the short positions would not have been able to easily rely upon bars that they would bring in if they weren't American made. That 39% tariff would have blown the whole thing sky high. So that's probably why rates on the exchange for physical and the following month or the December contract blew out. But I guess this just goes to show how tight and how fragile this whole ecosystem truly is. Right now, disaster averted, but I think the thing to focus on is the most well-funded and, more importantly, well-informed traders on the planet. Not just the central banks who have been doing this for years, but now entities within the United States are showing the importance of physical delivery over cash settlement and paper promises. You owned a multinational jewelry corporation, and you manufacture jewelry all around the world, and you relied upon your contracts at the Bank of England or the LBMA to provide your metal, and you're on a tight schedule, and you send in your certificate and you say, I need my metal. Paul, we're sorry, brother. I know you're expecting your bars to be shipped to you in 3 days, but we're actually a shortage of manpower and trucks here at the Bank of England. That's what they said to an 8-week delivery delay. But when we look at silver at the Bank of England or the LBMA, it might be easier to understand. So the LBMA has a free float of 155 million ounces of silver right now. They have roughly 800 million ounces there, but only 155 million are unencumbered. The rest belong typically, primarily, to the ETFs like SLV. So of that 155 million ounces, that is the lowest float they've had since they started keeping records. It's a 140-year-old exchange. They're trading 190 million ounces per day off of a 155 million ounce float. So they're 35 million ounces more than the float. However, that's bad enough. But he's saying, no, that's actually wrong, because they only post the final settlement numbers. They're actually, according to the LBMA's own statistics, trading 10 times more than that per day. But the final settlement numbers come out to 190 million ounces. So in essence, they're trading 1.9 billion ounces, up to 1.9 billion ounces per day off of a 155 million ounce float. That's 3.5 times annual global mine supply and 15 times or so the float. This is a problem when you get more delivery requests than there are bars available. Now it's manpower and trucks. We're sorry.
Yeah.
In essence, it's almost as if it's a default, and it's certainly something people should pay attention to. Happening in platinum as well, where the head of the Tokyo Metals Association says there is no platinum in local London or Switzerland, none, virtually zero, yet they're trading 3.5 million ounces per day in spot contracts, which are deliverable. This whole game has never been so close to being exposed, this Western system, which I think will then move to Shanghai, to Dubai, to Moscow, to the exchanges around the world that will have a better understanding of valuations. And that's where you'll see real price discovery happen at some point if we continue to abuse this system through levered futures contracts and naked shorting. And in the first 5 days of trading for silver, there was 1,721,000 plus ounces received into Comex. There was 1.89 million ounces withdrawn, leaving Comex, to your point, delivery. That's what's really weird. It's one thing for the delivery to come into Comex, to actually leave the ecosystem. Who's taking possession of 1.89 million ounces? That's several semi-trucks worth. Well, to your point on the tokenized system, yes, that in theory sounds great, but if there are tariffs on imports of gold and silver, first of all, this better be held in the United States. If it's not, taking possession is all but impossible. And when you talk about the noose closing around the ability to move things easily without reportability in the physical realm, Brinks was just fined $50 million by the Justice Department for not acting or not filling out paperwork to become a money services provider. They said, we're not a money services provider. They said, the hell you're not. You've been bringing metal cross-border. So because you've been bringing legal tender cross-border, you're a money services provider. And they settled for 40-some million dollars. So the point of it is that getting metal back ain't gonna be easy anymore, whether it be through tariffs or even the reluctance of these entities like Brinks who now have to be characterized as a money services provider to bring it back. So the real issue with a tokenized form of gold would be who's storing it, where is it, who's auditing it, and can you take physical possession of it easily? If the answer is yes, then that's the secret sauce. In other words, if you were able to do this in a Brinks vault in Salt Lake City, where it's completely audited, completely transparent, and yes, you can take possession of it, you've hit the home run. That's a trifecta that pertains to that. Short of that, it's got issues regarding redeemability here in the United States. I've been approached by several people to look at the beginning stages of that. But look at the LBMA, which is now completely losing its credibility. It has to be in a place where it is trusted, where it is validated, where it is verified, where it is deliverable, even if most of the people never wanted to take possession out of these exchanges. The fact that these exchanges are being, in essence, viewed as fugazi, viewed as BS, viewed as a fractional Ponzi scheme, they've lost all their legitimacy. So yes, if there was a system whereby we could tell our clients, look, you have immediate access, you have immediate settling, you have immediate auditing 24/7 on the blockchain, and the ability to take possession of it quickly, then yes, I think it would dramatically, it would change the gold market. As much as when I started this company in 1989, Paul, there was no internet. I started before the damn internet, making me feel old. Before the internet, people who dealt in securities were called stockbrokers. And then the internet rendered them obsolete with Scottrade making $9 trades. The advancement in technology could very quickly change the ecosystem. But it all boils down to transparency, trust, and redeemability, at least in my mind, for the people who favor redeemability, or at least the option to be able to do it when and if they want, over just about anything else. And I think that's really the key for those who are building this ecosystem out there who might be watching this. That's the key. The whole argument against stoning gold by traditionalists is that it doesn't pay any yield. It doesn't really need to when you compare it to all forms of traditional assets. But again, we here again are moving into a new system, a new world where these kinds of thoughts for the gold bug, you have to chisel away. Even for an old guy like me to break free from it. Most of the people, at least in the people that I talk to, it all centers around trust. And if there is a system that will allow complete and total transparency, the ability to earn yield, the ability to take possession, the ability to move in and out quickly, it sounds incredible and it sounds amazing. The yield part, I would argue, is probably not as important to the people holding gold as many would think, but what it would do, maybe to the people on the fence, the people who like the idea of gold back, see the value in owning something like gold that the central banks of the world are buying at levels no one has ever seen, and the United States becoming net importers. So sure, I'll have some exposure to the gold. I like the yield. I like the ability to move in and out, and all of those things I think are very bullish ultimately for the gold market. As a business owner, you must learn to roll with the changes. You must have an open mind, or you get rolled by them. And so
the banks are doing it.
Well, yeah, I mean, that's why I enjoy coming on a show like yours. And quite frankly, I've been saying forever that our two communities are actually more alike than not. My whole idea is to meld the two communities together.